types of accounting principles. The sixth type of accounting principle is the principle of conservation or prudence. The future of a business or future of a businessman is always uncertain. So, a businessman adopts the policy of playing safe. Playing safe means he do not anticipate a profit, but provide for all possible losses. Do not anticipate a profit unless it is actually received, but make a provision for all the possible losses which may occur in future. Thus, this principle states that all anticipated profits should not be recorded, but all anticipated losses should be immediately recorded in the books. Provision should be made by the business for all possible losses and all the known liabilities, all the liabilities which we know that we have to pay in future, or we know that these losses are bound to appear in future. Make a provision for them in advance. That means whatever is earned should not be spent fully or should not be treated as profit, but some portion of that profit should be used to make a provision for the future possible losses and the known liabilities. For example, provision for depreciation. These are the provisions that are usually made by the business. Provision for doubtful debts, investment, fluctuation fund, etc. A provision is generally an estimate, is an estimated amount of money which is kept aside to meet the possible loss or the liability. So, provision is the estimated amount of money which is kept aside from the profit to anticipate or to cover the future losses or the future liabilities that may appear in the future. The profit or the revenue should never be anticipated. And it should be recorded only when they are received, or it should be ignored until they actually takes place. So, profits or the revenue are never anticipated in advance and only received when the time they are actually takes place, while the losses and the future losses and the liabilities are anticipated in advance, and a proper provision is to be made for these losses, and the profit should be conserved. A part of the profit should be conserved for making such provisions. The seventh type of accounting principle is the principle of materiality. This principle is little bit similar to the principle of full disclosure, and according to this concept or principle, an accountant should disclose all the information in the books of accounts. There are unlimited amount of final information which can be provided by the accountant in a business, but in order to make the financial statement more meaningful, accountants record only those information which is material and important, and this depends upon the circumstances which information is to be recorded and which information is material and important. So, this principle implies that those items should be entered in the books of accounts which affects the financial results of the business. those items which are not important may be left out. Sometimes some items are more important due to the circumstances, but and the others are not so important and they may be left out due to circumstances. So the accountant should take special care when such items are dealt with. While dealing with such items, the accountant should take special care in deciding that in the present circumstances which are the items which are important and to be recorded in the books of accounts, and which items are not important and may be left out.